All right, so before we hop into the trade recaps, I do want to say anybody that is watching this on YouTube, if you're not in Team Bull and you want to get access to the full webinar that we are going to do today, the link will be down in the description to join the Team Bull trading community where you can trade live with me and a bunch of other amazing traders. So if you guys do have questions about these trades, feel free to type them in the chat. I do want to go over the trade that I ideally wanted. The only issue was it happened so quick in the morning that I wasn't willing to put on a trade in the first minute. Now, we talked about a very similar setup that happened, I think it was last week. And again, the same thing happened. It confirmed in the first minute of market open. That's why I didn't want to take it. So we talked about, let's go ahead and delete this. Again, this is the trade that I ended up missing. But if we take a look at these lows right here, this is London session. Just anybody, if you want to know that, London session is at 3 o'clock in the morning, which is 8 o'clock their time. So London low is what we're going to call it, pre-market low, really up to you. And then we have yesterday's high as well over here. We get the news in the morning, non-farm payrolls. Non-farm payrolls in the morning. Price comes up and it sweeps these highs. What do you think is going to happen to the buyers up here who are buying above yesterday's high? Starts breaking down. They're going to get stopped out, right? They become sellers. Again, we're reviewing the missed trade this morning. And then price comes down and it does the same exact thing under the lows, pre-market lows. It sweeps. Right? So we got liquidity sweep, liquidity sweep. This is telling me that they wanted to grab liquidity down here, up here, grab liquidity down here, and then more than likely they wanted to try to push it to the upside. Right? So we just have a basic liquidity sweep right here. Then breaking it down to a smaller time frame. Let's see, market open right there. I believe it was a 1 minute. Yes, right here, 1 minute. So there was two of them that you could have used. Again, I'm not going to get very specific on these kind of setups, right? We have that area right there, that area right there as possible entries. Let's stop right below these lows. So if we just go back and we replay this again, I snipe entries on the 1 minute or 2 minute. Boom, price drops down, spikes back up. This could have been a good entry, but again, I wasn't willing to do that. The market literally just opened, right? Way too high risk at that point. So say you did get long. Your stop is right down here. What can you aim for? These highs, these highs, these highs, or yesterday's high, right? Snipe it on the 1 minute, bye-bye. Go to the 5 minute, boom, price immediately, first price target up there, comes back down. Never invalidated it. Boom, new high, right up to second price target, right up to third price target. So that was the trade that I ended up missing. That entry right there. Again, just first minute of market open. Wasn't really willing to put on that risk. But yeah, that was the first one that we ended up missing. That was a quick trade. Now the second one that we actually ended up taking was because of that. Again, like I said, I still think that this wants to go higher today. It's just I hit my 2 loss, not goal, rule. If I take 2 losses in a row, I call it a day. But the second trade that we ended up taking, I have to see when I got filled on this trade. I think it was here, actually. Yeah, because on ES, we did that liquidity sweep, right? And then price came down, hit the area of interest, and then it pushed to the upside. So because of that, right, I was looking for a dip down into another area for a possible buy. So go ahead, delete that. Actually, we can just clean this chart up, right? So the reason why I got into the second trade was because there. Price came down into the area. We had this nice 1 minute dragonfly doji. That's what made me get long. And we took a trim up here. It wasn't anything special, but then I feel like I might have put my stop loss a little too tight. $5 under break even. Still ended green on the trade. It wasn't anything crazy. Came down, hit it, and then it rallied into the new high a day. So what I should have done was just kept my stop loss right below this low Again, I'm going to critique my trades. That way you guys can also apply them to yours. But yeah, in this scenario, I think I kept my stop way too tight. I thought, I didn't want to, my ideal was to scalp it back up into these highs. We took some profits right here. So I didn't want to go red on this trade. If it decided to flip and then start dying to the downside, definitely would have went red if that happened. So trailed it a little too tight, and that ended up costing me this rally back up into 440. So that could have been a one and done kind of day if I kept my stop a little lower. But again, we live and we learn. This is a different setup that I'm applying to my trading. So this is newer, right? So that was the first trade that we actually ended up taking. Second trade, I want you guys to see this because a lot of people, they complain when there's a losing trade. Guys, are losing trades going to happen? Yes or no? Hopefully everybody says yes. Of course, right? You can never have a 100% success rate. Never. So I want you guys to look at this chart and I want you to tell me what you would do. Just forget everything that you know that happened up at that 44.50 area on ES. Forget it all, right? And I want you guys to look at this and tell me, would this be a trade that you end up taking? What are you guys seeing right now? What chart pattern? And we've traded plenty of these in the past. What chart pattern are we seeing? Cup and handle. What does a cup and handle suggest? Upside move. Correct. Plus, given everything, SPX bounced all 4,400. We had the liquidity sweep into the continuation, right? Cup and handle, rounding bottom, slight pullback, 3-bar pullback to the 8 EMA is what we look for to then get the continuation. So as price pulled back to the 8 EMA, that's when we got long, right? 8 EMA, that's when we got long. And then price tried to push up. I was only willing to trim at a new high a day. That was the only area I was willing to trim. Contracts were up like 10, 11 bucks, but I wasn't planning on scalping this. So I was a little lighter size because I was looking for a larger move out of this. So we sniped it off the 8 EMA. Unfortunately, because you can see it tried to pop up right there, ultimately could not hold. And then we got stopped out. It happens, right? But the risk to reward was definitely here. Cup and handle, suggesting more upside, snipe an entry off the 8 EMA, and we got stopped out as price pulled back. It happens, right? Was that a good trade? Who could tell me? Obviously not knowing the outcome, but if you just went back to this candle right here, is this a good setup? Yeah, you got stopped, but good setup. Exactly. We trade where the risk to reward is. Yeah, if I saw this 100 times in a row, I'd take it 100 times in a row. This exact setup, because like I said, we've traded this exact setup many times in the past and they've worked. And then typically we'll get a new high a day out of it. Today, unfortunately, that did not happen. So that was trade number 2, losing trade number 1 right there. Boom. So as we got stopped out, I noticed that we spiked back up. Buyers were holding this area, and I was watching a 10-minute time frame. So I was like, okay, maybe they're trying to form a 10-minute cup and handle instead. That was my thought process going through this. Started thinking, okay, it didn't validate, or it validated on the 5-minute, just pull back a little harder. Maybe it's doing it on 10-minute. So on this candle, so what I should have done differently was waited for the 10-minute candle to close because we were long slightly before the candle closed, and it actually had a nice little wick below it, and it was holding above that 8 EMA. But my thought process again was, okay, we're forming a 10-minute cup and handle. Here's our handle right here. What are we looking for? That continuation back into the highs. And then boom, stopped out again. So because my rule, and both of those losses were very, very small. My stop loss on both of them was a little over $20 per contract, right? Now, had I not followed my stop loss, it could have went 30, 35. If it continued to tank, 40, 45, 50, etc. Right? I will take both of these losses right here because it was a good setup and I sized for appropriate risk. It happens, right? Just today's one of those days where I lost 2 trades in a row. That is very rare that it happens. If I'm losing 2 trades in a row. So yeah, typically after that, I just call it a day. Like I would really have to see a good setup to take another trade. And then unfortunately on the 15 minute ended up confirming, like I said, I still think price wants to push higher. Personally, I still do. But because I already had those 2 losing trades, I'm calling it a day. I'm done. Might actually be trying to form a little symmetrical triangle right here.